Hello and good morning, folks. Welcome back to Almus Market Mornings, your daily dose of financial updates with me, Shikhar Garg. Now, what an eventful closing for LIC IPO, which was initially seeing not so much of an interest, have now closed nearly 3 times subscribed. So now, interestingly, let's see how the allotment and the opening happens. On the other side, the equity indices show sea of red, while our currency USD INR made the all-time high in the USD INR terms. Now 77.51 was the high recently made. Let's see what Pankaj has to say about the financial markets. Pankaj, over to you.
Thank you. It's always a last day of IPO which attracts the maximum interest. Yes, and it was a last size IPO and got 3 times subscribed. That's a good news for the LIC and the equity markets, that there is a demand for the LIC shares were there. Coming back to the global markets, globally market yesterday ran to safety. In turn, basically 10-year USD yield softened closer to 3% from a highs of 3.22% during the day. This can be contributed to increasing coronavirus cases, and there's a continuing conflict in Eastern Europe. People bought safety yesterday. Another day and another 3% fall in Nasdaq, with other major indices not far behind as market continue to derate stocks according to the changed financing conditions and a prospects of a global slowdown with a high inflation likely to sustain. It's the first time since March 31st, 2021, the S&P closed below 4,000. Nasdaq trough for the session was lowest since November 2020. So basically, market is getting into a bear trend. We also saw that the oil extended its biggest drop in more than 5 weeks as the European Union softened some of its stance or proposed sanction on Russian oil exports. Dollar index hit a new 20-year high yesterday, as we saw a secular fall in the other currencies. However, with major currencies like Euro, GBP, and JPY already weakened substantially in the past 1 year, the baton has been handed over to commodity and EM currencies, where the potential global economic slowdown is playing out. Investors have turned also to Bitcoin and gold sales to meet their dollar requirements. Chinese yuan continues to make a new cycle lows, leading other currencies also lower, while other emerging market currencies which offered good carry play since the pandemic low are now seeing a big reversal. We had a breakout session in USD INR yesterday, as market opened with a gap of 77, above 77, a level which was defended by RBI for last continuously 2.5 months, and stayed near the highs for most of the day. Rupee sustained break above 77. Hence, the authorities are aligned to currency moves in line with the global dollars, particularly as many of its emerging market peers have been already falling. This has changed the sentiment in the market, as importers are now keen to cover on dips, while exporters stayed away and trading community holding on to the long position. The only factor that slows down the rupee lower is the carry cost, which is quite prohibitive to go keep dollar long against the rupee. Now, as factor B, sentiment in bond or equity markets, the FI is selling in equities, as the strength in dollar index has changed the direction, and that sustains the bias for more weakness in rupees ahead. The fall in oil price overnight by nearly 5% may be seen some relief, but it trades well above 100. Challenge on the external front for the rupee remains, and a creeping sense of India moving towards balance of payment deficit for the year. We look for a more rupee weakness in the weeks and months ahead, as the Fed tightening cycle has a long way to go, and risk on sentiment will take long to return back to the market. Without resumption of a foreign inward flows, and demand will be highly particular with our oil bill reaching record levels. So it's basically that will trade deficit will lead to a balance of payment deficit, can put rupee on slightly on a weaker tone. Technically, a move to 77.80 near term is a high probability. Only a fall below 76.90 changes short term direction. But for a medium term change of a direction, dollar rupee need to fall through 76. That's all from me. Thank you.
Okay, so what we see is, and strikingly different than what we have seen in the history, is the balance of payment deficit. Folks, we have not seen this in the longest of periods, at least a decade, if I recollect it well. So this is some different scenarios that we are playing in. The markets are heavily uncorrelated. Hope that we are having risk management as we have been calling at priority right now, because the markets are a bit volatile and uncertain. We continue to bring you all the insights that we have. We catch up again tomorrow. Till then, goodbye. Thank you so much for joining.